Rajan Shah, Chief Investment Officer with Indian Stock Broking. Rajan, morning. Thank you for joining us. What would you attribute this week's price action to? India-specific selling or some global adjustment?
Well, domestic issues certainly, because we all know that current account deficit is a concern at this point of time. Economy last quarter grew at about 4.5. Probably this quarter we should be growing at about same actually. And even for this year we should be growing at not more than 5.5. Though the government talks about 6%, so 5.5% is what we are expecting. So obviously, global concerns are there actually, but certainly I think the domestic issues are weighing more than global, and I think. But that is more or less, I think, factored into stock prices, especially in the small and the mid-cap space. The frontliners could take a bit of knock, actually, because some of the stocks are still richly priced. And we could see some correction over there, some adjustments over there. But I am not too bearish on the market. I think if you look at the broader market, there are plenty of stocks, Nikunj, which are quoting below the levels they were quoting in 2008 October when the Sensex was at 8,000 levels. I mean, today we are at 18,500, that is 10,000 points above what we were in October 2008. And yet there are plenty of stocks, I can name you 50 stocks which are quoting below 2008 October levels, So, it's not reflecting, the Sensex is not reflecting the true picture of the market. I mean, so there's plenty of value in the market. What you need to keep in mind is that this kind of things happen in the market every 2-3 years. You get an opportunity, this is an opportunity, and you need to deploy money and be patient, and you're sure to end up making money. We also need to remind ourselves that there was a time in October 2008 when we were getting Voltas at 35, that same Voltas rallied to 235, we were getting HCC for 33 bucks, it went up to 133, and history is going to repeat itself. I'm not saying that it's going to happen in next 2 years, but yes, big money is made only when you buy when there's gloom and doom on the market, in the market.
What are your thoughts on large cap IT stocks? Just about everyone on the street is convinced that US economy has revived, that will benefit IT stocks. Do you think large cap IT as a trade is getting rather crowded now?
Well, I would agree with you, Nikunj. I think a lot of money has gone into large cap IT companies, and if they disappoint, which I don't expect it to, but I think the valuations are more than reasonable at this point of time. We could see some selling happening in that space, especially Infosys, TCS and Wipro. Our bet in the IT space would be Tech Mahindra, which is quoting at very reasonable valuations. So, angel view is Tech Mahindra in this space actually.
Any reason why you are hot on Tech Mahindra? Because Tech Mahindra has been a marked outperformer in last 1 year. It is up something like 80-85%. So why do you like the stock after 80% appreciation?
Valuations. It's quoting at very reasonable valuations vis-a-vis Infosys, TCS or Wipro for that matter. So I think valuations are still attractive. We have a target of about 1150 for Tech Mahindra over the next maybe by December actually. That's about 9 months from now. Purely valuations.
Rajan, how have you read into the news of the partial decontrol in the sugar space? A long wait, finally it's come by, but does it seem like it's all in the price? And given the kind of market mood that we're currently sitting in, perhaps we may not see too much upside in the sugar stocks from the current levels.
Well, certainly a positive move by the government, and certainly it's going to lift the mood in the sugar stocks today actually. It certainly is positive move, but I think probably we'll see the stocks because the market sentiment is very poor at this point of time. We'll not see that action which we would have seen in a good bull market. But I think this will see that there's no further slide in the stock prices of all the sugar companies. We could see a smart 5-7% kind of move today in many of the stocks. But in this space, two stocks which we like a lot actually. Good quality managements, good valuations, and would obviously benefit just like any other sugar stocks are. One is EID Parry, where we expect the earnings to move up by 4 rupees because of this partial, the levy thing going off. And the second company, again a very low profile mid-cap company, is Banari Aman Sugar. Both are, one is Chennai based, south based, EID Parry, and second is Coimbatore based. So both these companies, EID should see earnings move up by about 4 rupees per share, And Banari could report as high as 150 rupees earning per share for the current year, and the stock is at about 850 levels, So it's trading at hardly 6 times, and EID is trading at, in fact, less than 10 times, And the interesting part about EID is that it also owns 63% stake in Coromandel International. The value of that stake is 3,000 crores, whereas its market cap is 2,500 crores, So you're getting the sugar business completely for free.
Talk about the market setup, and the market setup is, let me just throw some data at you. $12 billion came in for the quarter gone by. Nifty came down by about 3.5%. 1,000 crore of outflows in last 2 days, and Nifty is down 200 points.
Well, I think you are absolutely right. 12 billion came in. Last year we had more than 20 billions coming into the Indian market, and yes, these are the facts actually, and still the market is not performing because of domestic issues and all that. But Nikunj, we need to keep in mind that the market has gone nowhere over the past 5 years, and in 5 years corporate earnings have actually moved anywhere between 60 to 90%, So logically, if you take a bottom of 8,000 in October 2008, and if you add maybe 100% to it, the market should logically be at 16,000, Sensex, because the bottom of October 2008, 8,000 Sensex would be roughly around 16,000 at today's prices, So I think market has got very limited downside, but we also need to keep in mind that Federal Reserve has been easing, ECB has been easing, and now Bank of Japan is pumping in, I think, about $1.4 trillion actually, which is 1,400, 1 trillion is 1,000 billion, so $1,400 billion actually. And even if India manages to get just 1 or 2% out of that, I think it should see 15 to 30 billion flowing into the Indian equity markets over the next 2 years. So, and we also need to keep in mind that retailer is out of the market. So if the market sentiment improves, which is not likely in the current scenario for a while, and retailers come, I think we should have a strong rally. So we are positive on the market. Yes, the frontliners may correct a bit, but I think mid caps have been out of shape and are trading at 5, 6, 7 kind of P multiple. In fact, I can tell you 50 companies which have reported very good numbers in December quarter, and yet the stocks have been thrashed 25-30%, over the past 3 months.
So a list of 50 companies, Rajan.
There, and
Rajan, I'll tell you what, let's discuss one. Give me one stock name where you're confident of a 30% upside in next 24 months. Forget 12 months. 12 months is a short time frame.
You're too bearish or very pessimistic on the Indian markets.
I'm being realistic.
Anyway, yeah. No, everybody says so when there's a bear market and markets are out of shape and there's a bearish overtone across the market. This is what people used to say in 2008. That next 5 years now the markets are not going to revive. But we saw a 175% rise in Sensex in 2 years. From October 2008 to November 2010, the Sensex went up from 7,700 to 21,000. And we are hearing a lot of bearish noises. So it's fine. But yes, I can name you 3 companies right away. One is United Phosphorus. December quarter profits went up by 30%. Stock will report about 14 rupees EPS for the last year and at least 15 and a half for the current year. Stock is trading at 119, which is hardly 8 times the earning. Finolex Cable, December quarter profits went up 60%. Stock is down 25%. SL Propack profits went up 60%. Stock is down 25%. I mean, this stocks, SL is quoting at 6 times the earning. Z Entertainment, a group company, is quoting at 25 times the earning. And why should you be giving 6p multiple to SL Propack? Why are you giving hardly 6p multiple to Finolex Cable? I mean, Escorts reported a 200% growth in profits from 9 crore to 27 crore. Stock has been hammered from 76 to 49.
Right. Okay, Rajan, really good chatting with you. Appreciate you taking the time out and joining us on the show today.